It's Brian again, back with a couple of our favorite charts to talk about markets and what you should do when times are not fun, like what we're going through here in April and May of 2025. This is one of my favorite charts to remind people that every crisis has a little bit of a precedent. A lot of people like to say that history rhymes. We think that's true. There are tons of examples on this chart of things that were scary, made people feel very unsure about investing, and in some cases made them feel very unsure about a lot more than just investing, like 9/11 and other national tragedies. So on this chart, you have things like multiple Russian invasions of their neighbors, COVID-19, 9/11, very obvious crises throughout history. You also have things that are easier to forget about, like Black Monday in the 80s when the stock market went through a really challenging day and then subsequent year or two. There's multiple wars on the chart. There's just things here that can be very scary. And every one of them felt like a reason to sell all your investments and panic and run and put your money in your backyard or put it in cash at the bank. The reality is when you get history spread out on a chart like this, none of these was a reason to give up on your plan. And the same goes for this current time period we're going through now. There are tariff stories throughout history. This one is a little unique, and in many ways it's also similar to some of the periods where you had a lot of tariff wars or trade wars going on. So we have a plan, our clients are invested in that plan, and we're going to be just fine when we move on to the next crisis down the road. This is another one of our favorites. It's a good reminder that stock markets don't really care about calendar years. So it's easy to say something like 2023 and 24 were great years in the stock market, and that would be true. There were also tough months inside of those years. And so if you look at the red dot, each one of these years, that's the lowest point of the S&P 500, which is a good proxy for the US stock market. It's the lowest point of each calendar year. And so there are tons of years here where the market ended up positive, sometimes by a lot, but some point during the year was quite a bit negative. It doesn't mean this year is going to end up positive. It doesn't mean we know where the bottom is of what we're going through now. It just means that years don't really matter when you think through how to invest. And so you can't segment into this January to December time period. So keep in mind, markets go up, they go down. More than half of the time they end up positive, and the price you pay to get those good returns is you have to live through those tough months or quarters or years where you're hanging out where these red dots are. This is a quick spotlight on an active mutual fund manager that all of our clients own, and it's a highlight of what active managers can still do for clients and for managing your money. And so this simply shows volatility in the stock market in the light blue and the amount of cash in this strategy in the dark blue. This is not a guarantee for the future. We're not predicting anything. We're simply saying that there are still managers out there who can let their cash sort of accumulate while times are pretty good. Think about maybe 2021, 2023. When everything's doing great, they are a little more cautious. When the world freaks out and has a really challenging month or quarter, they have cash on hand, they have dry powder, and inside of your accounts, they're going and buying things on their wish list, and they're paying less for it than they would have to 3 or 6 months ago. So we also have a Warren Buffett quote on here. Everybody has probably heard this. You want to be fearful when others are greedy. You want to be greedy when others are fearful. And this is exactly the time where you want to lean into that uncomfortable feeling in your gut about your portfolio. And in reality, you want to be buying things that are on sale.